Welcome, everybody. Today we have Tim Harvey joining us on the Breadroom. Tim Harvey is a former three-time SaaS CFO, helping lead finance for companies like Angie's List, Scale Computing, and Moxo. He began his career with IBM in finance and accounting and has executive experience with leading Silicon Valley tech companies such as Silicon Graphics, Veritas Software, and WebEx. He's currently a practicing CFO advisor and consultant, providing guidance on business strategy and financial planning and modeling, helping early stage tech companies grow their business. Tim Harvey, thank you so much for joining us today.
Yeah, no, thanks, Mateo. Appreciate it. Good to be here with you.
Yeah, super exciting episode. This one's going to be a little bit different. We're going to look at things from a finance lens. So really appreciate having your expertise on here. Figure we can jump straight into some of the meat that most founders are probably wondering, which is really going to be like, what metrics do you really think from a CFO standpoint matter in today's SaaS market? I know things have changed quite a bit recently, and there's a lot of metrics that we can look at, from burn rate, lifetime customer value, customer acquisition cost, all that. What do you find most important?
Yeah, no, great question. And so I work mostly with early stage, high growth companies and environments. That's kind of my key focus. And the companies I've worked for in the past have been able to generate those things and work with them in terms of the financial planning and modeling. A lot of my focus as the finance person coming in is to help with go to market. Sort of a little bit ironically, but and by that, the areas of what's the investment for growth, what's the capacity that you need, and you've got experience in this. We've worked together on some of this at Moxo. But what's the sales capacity needed to deliver the top line projections that the company has? And in order to do that, what is the funnel? What does the lead gen need to be to accommodate those sales folks that can go out and make the sales? So I've spent a lot of time on that sort of what I call sales capacity planning and modeling. And so a lot of the metrics are around that. For example, how do you generate leads? What does that productivity look like in terms of dollars spent? How do you leverage PR and sort of, I'll say, non-financial driven activities? But what does that create in terms of lead gen? What are the yield rates you experience? Where are the places that you can get the most benefit for that investment for top of the funnel activity? And then I look at, you tend to look at a lot of the yield rates within the funnel, right? So what's the conversion rate from marketing leads to sales generated and sales optimized leads? And then obviously going into the sales team as they pick out those leads and start to go work those relationships, what does their yield factor look like? So that's a big area of focus. I think that a lot of people overlook that concept of how do we load up enough wherewithal into the engine so that the engine is running well and has a lot to go burn. Obviously, then you get into sort of the traditional things such as growth rates. What is the annualized in SaaS environments, or what's the annualized recurring revenue growth rates? What are the retention rates you have? Things like customer acquisition costs, long-term lifetime value of customers, et cetera. And how do you project those and get some data? And one of the things that's key in all of this is having a good data set, both out of whether that's the CRMs or sales, gen tools that you use, such as HubSpot or Salesforce or whatever it might be. What's the data sets you can use to go make some predictive analytics on it? And then converting that into the financial side of things, certainly through the accounting process and the revenue recognition process. What's the data sets that you can go use to make some predictive analytics? So it's a lot of focus on what does it take to drive the growth once you've kind of set your targets. What are the physics that have to happen in order to generate that activity at the top line? And then you get into all sort of the management side of the P&L and margin analysis, et cetera. But those initial investments into generating opportunities, very important. And then what are the growth categories and the growth analytics that you have?
Absolutely. It makes a ton of sense. I think if we rewind a bit where you mentioned how you focused on some of the go-to-market aspects of finance, let's say there's a situation where a startup is looking to sort of hire their first salesperson or maybe grow the sales team a bit. So they're very early. They probably have some good product market fit, initial feedback, and they want to increase sales. How do they know when it's time to hire and to start to scale the sales force? That seems like a really important decision.
No, absolutely. And particularly for, the earlier stage, right? The founders, the founder-led companies, and they've been sort of an army of one for some period of time, but have gotten, to your point, some proof points on what they're selling and the technologies or the products or services they're offering. It becomes that sort of tip over point, at which point is the sales activity starting to come into play such that they can't cover everything. And there's it's kind of that chicken and egg of waiting for the market to come and adopt to what you're selling, but also generating and starting to create some interest and then some demand. So I think, there's no set number. If you're doing multiple sales in a week or a month, probably start to think about bringing in some sales resource, some capacity, we describe as sales capacity to help with that. There's a ramp up period for that. So now you're into kind of the conceptual investment cycle, right? Which is I'm gonna have to bring somebody on board, train them and educate them about what we're offering, how we like to do things, our philosophy with customers, the relationship with customers. Very important. So typically the sales rep is not going to be quote productive from day one. And so you have to kind of decide and understand what does that ramp up period look like. And then also, what am I doing on to the demand side of things at the funnel? What am I doing to create enough wherewithal that person will have things to go work on in addition to that the founder may be doing themselves, right? So there's, I hate to say it, there's no set pattern on that. It does depend kind of where things are, how much traction they're getting. I think most important thing is that founders should trust their instincts. When it feels like they're getting overly stretched and starting to miss things in terms of sales opportunity or calls or whatever it might be, that's the time to certainly start thinking about it then. And also, I think in terms of planning, in terms of anticipating that, one of the things I work a lot on is that strategic view of where the business could go. And so as you set sort of your milestones out for current year, current quarter, current year, out year, and then out years, how quickly do you want this business to grow and what you think it can do? That's how you can anticipate what kind of sales capacity you'd need. Again, that concept of sales capacity modeling with lead gen, sales resources, and then generating revenue. All those things factor into how a founder should be thinking about things. If you wait too long, then you're behind the ball. But if you can anticipate some of those things and have some of those sort of strategic thought processes in place, you can anticipate where you think things will go. And that's when you can start to plan and say, it looks like in the next 3-6 months, we're going to need to add some folks to help us go sell.
Yeah. Yeah, that makes a ton of sense. And I've seen that as well. I think that's a great sort of like a milestone to say, which is founder-led sales is part of a lot of startups, and they are sort of the sales rep in some sense. And when they feel like they need some help, that probably is a great signal to start looking at hiring some external people dedicated solely to selling the product.
Right. And I think certainly, look, this is kind of what you've been helping with, right? Which is helping them understand what that takes. How do you put resources in place or identify what kinds of resources you need?
Yeah. And so once you start hiring salespeople, I think there's an interesting thing that happens at a startup, at least, where time is very important. You might have a limited runway and limited resources. So you probably want to start seeing results as fast as possible. But like you said, depending on the product, the segment you have, whether it's large enterprise, mid-market, commercial that you sell to, your sales cycles might take some time and there's a ramp period. So as a CFO, someone who's trying to manage and protect the balance sheet and all the different financial statements, how do you look at what an appropriate ramp period is where you want to start seeing some effective results from the sales hires, but also giving them some grace period to get familiar with the product and the sales process?
Yeah. No, absolutely. And it depends on sort of the business, what the dynamics of the marketplace look like for that business. But typically we kind of allow at least a 30-60 kind of training period where very limited, if no expectations on quota delivery, for example. And so we build it in on the financial modeling for conservatism for sure. The goal and the hope is that the plan would ramp more quickly, but at least if it takes more time, and those are driven by the ramp periods are driven by sort of complexity. If it's a tech, I'll talk to sort of tech solutions, which is kind of where I play. The more complex it is, the longer that ramp period as the individual gets familiar with what that tech is, what the use cases are, what the different market application sets might be, who are the customers, who are the decision makers. So as you get more complex, those timelines push out generally. It is kind of case specific as to what you expect. I'll say at a minimum, I kind of view 30-60 days of just training and learning, development, getting, understand the culture and the philosophy of the business and how they go to market, understand the messaging and the ability to do demos, et cetera, is kind of a baseline. And then it's kind of case specific.
Yeah. And that makes sense. I think a big theme that we see here in the show in general, but especially even from a finance perspective, is that it'd be nice if there was this like set rule where it's like, okay, we always follow 30, 60, 90. But I think there's this big theme of testing, changing, iterating, where it's just, you can't put a blanket statement out there. Every product is different. Companies evolve. So it sounds like even from a finance perspective, just how you are in product, you need to be flexible and change with how you're seeing things
Yeah,
effective
no,
in the
absolutely.
market.
I think, and again, the earlier stage you are, the more you'll see some of that iteration, requirement testing, and what I call A/B testing, but putting things out there that you can kind of check and see how the responses are to those messages. Now, obviously, the earlier stage, harder to get data sets that are meaningful, but you can get I'll say, an intuitive sense of whether people are responding or not. But yeah, I think, again, those are the things you want to look for, kind of what are patterns that are coming out, and being very cognizant of that there is going to have to be, as I tell all the folks who work for me in tech companies, you have to embrace the ambiguity, right? So you've got to be ready for a lot of change and shifts and pivots and whatnot. So that's just kind of nature of the beast if you're going to be certainly an early stage tech.
Makes sense. Well, let's move on to a very important category, which just can't be ignored, especially if you have external funding, which is run rate and managing your burn. Every company, especially startups, typically aren't profitable. So how should founders think about managing burn, and if their burn rate's too high, what advice would you have for them?
Yeah. So obviously, as we say, the old adage, cash is king. That's what will drive a lot of your capability and ability to be flexible. So if you're pre-funded, so you've either bootstrapped or you've got friends and family money involved, you've got to just be very cognizant of what you're spending on, and making decisions based on the ability to move forward. A number of companies I've consulted in the past have come to them when they've been in a place where they've overstretched. So I think that's kind of the first thing, depending on where you are stage wise. The earlier stage, the more you have to be willing to put the bootstrap time in. And that's, covering soup to nuts. Once you get to a little bit of rhythm and you've got some employees in place and some folks doing some functional activities, I think then you have to be very cognizant of where could those activities go. And that's where I think the strategic planning really comes into play. If you're at the point where you're starting to hire people and get your brand out there, if you will, even on a limited basis, you need to have a sense of what you think the business is capable of doing. And then how are you tracking to that plan? So you start with kind of the visionary statement, if you will, and then put out, we'd like this eventually to be an X type of business, and that's a size and a status and a market offering. And then you start to fill back into, okay, how do we get there, right? So what are the steps that I need to deliver on what I think is the vision for this company? And that's where you start to get into much more of from a strategy standpoint, into the fiscal planning, and then the tactics of running that operation. And so you have to be very realistic, and you've got to have very clear metrics and touch points and milestones along the way. That's why it's critical to do, sort of monthly and regular reviews of where things are, to see if you're tracking to those things. And those are metrics both financial, in terms of profitability, cash management, et cetera, but also in terms of operations. Are we getting enough contacts? Are we getting enough demos out? Are we getting enough sales closed by the rates that we thought? And so all those elements come into play. Yeah, cash management. And particularly these days, I mean, several years ago, when things were various points in the cycles through the tech area, things get frothy, but there's a much more, I'll say, pragmatic, and I think rightly so, more pragmatic view of both where companies are and their ability to deliver on a reasonable profitability. And that may be at a loss, as you're in an investment cycle, but at a more reasonable level than it might have done, many, many years ago. So all those things factor in.
Yeah. Okay. And just hearing you talk, I think there's an interesting theme of, at least a lot of people might initially think a CFO is solely focused on the numbers, right? Finance. But you've talked a lot about sales and operations, go to market, and thinking about, sounds like, every area of the business. If you're to think about where you spend your time in a company, if you're the CFO, you're that strategic partner to the CEO, how do you split up your time? Is it all finance? Is it mixed across every department? It sounds like you've got a broad picture focus of the company.
Yeah, great question. So a lot of folks say, I'm an early stage, I'm a startup company, I need a CFO. And mostly what they first need is they need someone who can track the accounting and make sure that their financials are in order and visible and usable, right? So that's kind of step one. And then the next thing that I find is they need quote, need a CFO. And that means that they need somebody to help them analyze and evaluate how that business is doing. So once the financials are in place, and again, I'm a very big believer in, you have to have a rock solid foundation in your accounting, because that's where it all starts. And that's the first visibility point for you as a business owner. From there, it's, okay, what do we do with this? We've got some data now. How do we understand what this is telling us? What are some things that we want to look at that we might potentially do differently? And how does that affect those financials? So yeah, I spend a lot of time, and kind of things that I've shared with my finance teams over the years is, number one, you have to understand the accounting of the business. Two is you have to understand the business. So you've got to go really learn what it is, whether it's a product or a technology. Get as deep as you can on that so that you understand what that technology offering is and then what's doing in the marketplace. Without that, it's kind of just numbers, right? And so from there, I spend as at the CFO level, a true CFO level, most of the effort is around a strategic view and helping the founder or the core exec team's vision turn into and translate into sort of a business plan and then an executable plan. And then that gets reflected in a financial profile of that. And so I'm, as I mentioned throughout my career, I've spent a lot of time with the sales and marketing folks, again, mostly in high growth environments that I've worked in. That's the key, right? So how do you drive that growth? How do you understand what that growth means? How do you understand what the investment into that growth looks like? So I spent a lot of time there, and equally on the product side and engineering side, again, the tech business, which is kind of the heart. So I always kind of go through a set of questions when I look at a new opportunity in a tech company. And the first thing is the tech game changing, right?
Yeah.
What is it about it that's different and unique that nobody else has or may not have? And then it's kind of, and who's the founder and the visionary and what do they plan to do with this thing? And then you look at sort of the exec team and then who's, is there smart money on the table? But the point is that it starts with a very, this is a business kind of profiling that I do. Clearly, you have to have a core foundation, and that's critical for any founder out there, is to have a core reliable accounting foundation. That's going to give you the data and the understanding of what the business is doing. But then you have to have the ability to go say, okay, I want to add a new product or new feature, or we want to expand into a new market, either geographically or vertically. What does that take? And so then you can have those conversations and say, let's go laser focused on these two things.
Awesome. Yeah. Love hearing all this. It makes me really wonder too, what are some of the bigger misconceptions you think there are around running a finance org, whether that's startup specific or just in general?
Yeah, I think a lot of people, as I mentioned, folks think of it as accounting only, right? Which is, okay, just close the books and tell us what the numbers are, not understanding or appreciating what those numbers are actually able to provide, right? And so it's a big, sort of that continuum of turning data into information, and then making some recommendations and some actionable steps around that information. And that's kind of the insight part. But I think, one is that finance is just accounting. Two is that finance people are always going to say no. When I first start with companies as an inside, CFO in my CFO jobs, I spend time with each of the functional areas and leads, and then also just the folks who are working those organizations to make sure I understand what's going on with the business. And I think that's kind of a surprise to some people. Less and less so, I think, over the last, 5+ years, 10 years. But I think that's, those are probably the two misconceptions I'd say, is that finance is just accounting, and that, finance is always going to say no. And so, I look for opportunities to say, where should we invest? We did some interesting things at WebEx many years ago, where we did actually a full carve out with some potential for unknown, unidentified strategic initiatives. And then we had a regular review process to go through those. And it was kind of, that's an opportunity to say yes, right? So it's having those two things, I think, are probably the biggest, messages that I run into oftentimes.
Mm-hmm. Yeah, you hear that, salespeople and buyers? Tim's giving you the green light to ask for more money. Totally kidding.
Have points, but we want to have those discussions for sure.
Yeah, I wish we had more time. We might have to do a part 2, because I think that's like a perfect example to talk about, like, how should you be going about as an employee asking your CFO for budget and approval. And there's a lot we could touch on there, which is important, but we're coming up on time. So I'd love to go on some closing thoughts. What are you most proud of that you've accomplished, Tim?
Well, I've been at this for a long time. I've been in tech for about 35 years. I started my career with IBM and then worked for a number of very interesting different companies. I think that's probably, for me, that's been the most fun, and what keeps me really engaged is the excitement of what technology can do. And so the ability to really change people's lives through products that we deliver. And I've been very fortunate to work for a vast number of very interesting and game-changing companies, leaders in their space, innovators, and that's kind of the fun, exciting part of tech, is who are those folks that are thinking up new things and envisioning things. And obviously now there's a lot of buzz around and focus on AI, which is clearly going to be the next sort of generational change. I mean, my career, I've gone through the introduction of the PCs to the internet to now with AI and others, but those are the fun things that are exciting. And I've been very fortunate that I've had the chance to work closely with folks who founded some of those very innovative companies along the way. So that's, for that, I've been very grateful.
Yeah, amazing story, and would have been really cool to see all that stuff as it was coming out. And some closing thoughts then. If people want to connect or learn more or work with you, Tim, what's the best place for them to find you?
Right, probably through LinkedIn and email, but LinkedIn is probably the easiest way to find me. So Tim Harvey, and happy to have conversations.
Cool. Well, thank you so much for your time, Tim. I know a lot of founders and people working in startups are going to get a lot of value out of this.
Yeah, thanks, Matteo. Appreciate it. It's great to see you again.
You too. Thank you, Tim.
Yep.
All opinions expressed by Matteo and his guests are solely their own opinions and do not reflect the opinions of their employer, employees, or affiliates. This podcast is for informational purposes only and should not be relied upon for investment decisions.